Hello everyone, it is Canadian Futures Trader here. Welcome to the channel and welcome to the video. Today's video we're going to be talking about the various funded trader evaluation programs and specifically the maximum contracts, the rules around those, scaling plans, how it all works, and then at the end I'll give you my own personal tips and recommendations related to trading and how to handle these. Why I decided to make this video, two reasons. One, I was already kind of thinking about trying to create some of these videos that really are geared towards new traders. The entire channel started because when I started futures trading, I had a really hard time finding just good information about trading in general, whatever it was, whether it was specific functions in trading, the trader evaluation programs, etc. You run into so many people that are just trying to sell you something. I'm not trying to sell you anything. I'm just trying to put out good information to make it easier for the next generation of people who are looking for information on YouTube like I was over a year ago. As well, I got an email from somebody who actually asked a few questions about the scaling plans and maximum contracts and how it worked, and that kind of drove it home that really it isn't always clear. Futures trading can be very confusing when you're first starting out. There's an entire vocabulary that goes with it. How it functions is somewhat similar to trading stocks, but really not the same as trading stocks. So I can easily see how people would be confused. So that is the purpose of some of these videos. So let's get to it. First thing, a risk disclosure. You can pause the video and read all of this if you would like to. I also have this and more posted on my website at the address at the top there. Okay guys, so we got a lot of stuff to go through, so there are timestamps down below if you want to skip ahead to a specific section. We're going to start off with talking about contracts and lots, what they are, then we'll get into the maximum contract size related to these valuation programs. And then after that, I'll get into scaling plans. And then lastly, like I mentioned, I'll get into some of my own tips and tricks. So this video really is geared more towards if you don't completely understand any of those things. If you've been around the futures trading world for any length of time, this video might not be for you, but feel free to watch along and hey, who knows, maybe I'll say something of interest. So what are contracts and lots? Effectively the same thing. Simple answer. The terms are used interchangeably. The term contract is what you will see far more often, I would say, especially in the trader evaluation programs. But I tend to use the word lots a little bit, so if I say lots or I say contracts, it's essentially the same thing. The equities equivalent, so if you come from an equities, stock trading, options trading world, would be an options contract. So, you might say I bought 10 call options of Apple. In the futures world, you might say I bought 10 lots of the Ultra Bond. Now, before anybody, sticks their hands up and say that's not really true, they're not quite the same thing, I completely agree. At a high level, though, think of it as a contract or lot is essentially the denomination of what you are buying and selling. You're buying 10 lots, you're buying 10 shares, you're buying 10 options contracts. They are essentially the unit of purchase. That said, they are also traded in whole numbers. You can't buy and sell 1.5 lots. You buy one lot, or you buy two, or you buy three, etc. Now, a lot or a contract represents a different underlying obligation if it's held to maturity. That said, in these funded trader evaluation programs, you would never run into that. The reason being is one rule that goes across all of the programs is you need to be flat, meaning at the end of the day, meaning you don't hold any open positions. I'll take that back. Some do have, swing trading where you can hold overnight, but I think for the most part, the programs at least that I go through, I'm not interested in the swing programs. I'm looking at the pure future scalping ones where you're just flat at the end of the day. So we're not really going to get into what the contracts represent. We are going to a little bit in the next few slides, but I'm going to focus more on just the actual trading programs and how these function in that realm. So an example, crude oil, one crude oil contract, or CL, represents 1,000 barrels of oil. How would you know that? The CME group, their website is a gold mine of information. Anything you need to know about a specific product, what the contracts are, go to the CME group website and you can find it there. just search for like crude oil contract specs CME group. You will find this. So I put a copy paste here of the website. You'll see here it'll show what the contract unit is. So 1 CL contract represents 1,000 barrels of oil. It'll also say other important information here is 1 cent per barrel equals $10. So what that's basically saying is that for every 1 cent movement in the contract, so say let's just give an example, say I bought one crude oil contract for $60 and it goes up 1 cent, $60 and 1 cent, I would make $10 per contract on that trade. So that leads me to know your product. There's so much to learn with futures trading. I realize that. There's an entire vocabulary. Again, at the end of the presentation here, I'm going to give you a few tips, and one of those is to take your time and kind of learn some of this stuff before you just run ahead and dive in. So at a minimum, understand these few things, all related to the product and the contracts. Understand your product code, so, crude oil, it's CL, Ultra Bond, UB, the E-mini S&P, ES, etc. Know those codes. Expirations, you have to understand how these contracts work and how they expire. Not only that, some contracts expire monthly, some contracts expire quarterly. Crude oil is monthly, Ultra Bond quarterly. So it's important to know that. As well, there will be a code associated with each month. You can find those, again, literally type in Google what I have written here. What is crude oil May contract month code? You will find that. And again, all this information is also on the CME Group website. Also, very important with futures contracts is know your tick size value. It is not universal. Crude oil, we just saw on that last screen, crude oil is in 1 cent increments that it trades in, and each of those increments represents $10 per contract. I have it written right here. Take the Ultra Bond, which I enjoy trading. It trades in 30 seconds. So not every product trades in 1 cent increments. Not everything is denominated in whole dollars or, hundredths of a dollar like you might be used to in kind of a stock trading world. So the Ultra Bond I wrote here, Ultra Bond moves in 30 seconds, and each tick is $31.25 per contract. These are just two examples. Some contracts trade in $5 increments, some trade in $12.50 increments. There's $10 increments, etc. Some trade in a little over $15 increments, thinking of like the 10-year bond, etc. So again, it comes back to the title of this slide, know your product. So whatever products you're deciding to trade, you need to know this information before you just jump in and start firing away. Okay, now that we've kind of talked a little bit about the contracts, let's get to kind of the initial purpose of this presentation, is talk more about the max contracts. How does this all work? Every trader evaluation company will list the maximum contracts and any scaling rules. And I'm going to give you a few examples on the next several slides. Each company is unique. So one company might have a 100K account that gives you 10 contracts max. Another might have a 100K account that gives you 12 contracts max. So you need to know that as well. Some of these companies will lock you out from buying more than you're allowed. They won't let, if your max is 10, you can't put in an order for more than 10. It'll come up with an error. Others, though, will allow you to buy more than over your limit, and then you will break a rule effectively for doing so. So you need to be very careful. Okay, let's look at a few examples. So this is TopStep Trader. I have it circled there. This is right off of their site. The maximum number of contracts will be pretty prominent on their websites. It's kind of one of the main features of these various trader evaluations. You want to know what you're allowed to trade. So here they have max position. So 100K account up to 10 contracts. LeeLoo Trading. Theirs vary as well. I think theirs are a little bit on the higher side. I don't have the 100K shown here, but for example, the 50K, you can trade up to 8 contracts. OneUp Trader is the last example, just to show another one. Again, all of theirs, so their 100K, you can trade up to 12 contracts. So like I said, it varies company to company. It's all in the same kind of similar number, but they will vary. So what does the max contracts number mean, essentially? So it's just the maximum number of contracts you can have open in a trade at any one time. And I'm going to go through a few examples. So this includes long and short. So going short counts, you go short 5 contracts, that counts as 5 contracts being used in an open trade. Again, we'll go through examples. You can be open in multiple products. I think that's pretty universal across all of these companies. You don't have to fully close a position before adding more. As long as at any given point you're not over your maximum, you're in the clear. So let's look at a few examples. So example number 1, your maximum contracts is 10 per your evaluation rules. You open a long position in the ES of 5 contracts. At this point, you could add 5 more ES contracts, or you could add 5 contracts of any other product. Like I said, you can be in multiple products as long as your total isn't above 10. Now I mentioned here, and I mentioned before, direction doesn't matter. So 10 total contracts. So being long 5 contracts and being short 5 contracts doesn't net to 0. It nets to 10. You're in 10 different positions. It doesn't matter that 5 are long and 5 are short. They don't offset. They accumulate. Example number 2. Your max contracts is 10, same as previously. So you open a long position in the ES of 5, and then you open an additional position in crude oil, CL, of 5 contracts. So you're currently at your 10 limit, but you're fine. You're in the clear. So a bit of time passes. You close 2 of the 5 ES contracts, and you close 4 of the 5 CL short contracts. So currently, you still have 3 ES open, right? You had 5, you closed 2. You still have 1 crude oil contract open. You were short 5, you closed 4 of them. So in aggregate, you're still open with 4 contracts. You don't need to close these 4 before you do anything else. You now still have 6 contracts available, as long as, and I've said it already, but your total at any given point isn't above 10, you are fine. You don't have to go all the way back to 0 before you can get back in. So if you are new to futures trading, just one recommendation, I wouldn't be jumping around and entering contracts in multiple products anyways. I would try to just focus on one thing at a time. But if you are trading, if you are using Rithmic to connect, you can check how many positions you have open at any given time. This is a trader dashboard example in Rithmic. It's a popular way to connect your trading platform essentially to your account. So a lot of the companies use Rithmic. If they don't, whatever software they use, there will be a way to check what positions you have open. So this is showing there's no positions open, but say in that previous example you are long 5 ES and short 5 crude, you would see that right here. You'd see long 5 and short 5. So as I mentioned, all programs have a way to check it. So this is just an example from Jigsaw Day Trader. So I entered just a position and test account just to show Ultra Bond buy 1, and I have checked here open positions. So at any point I could come in here and see what positions I have open. So there will always be a way to check. So you don't really have an excuse of saying, well, I just didn't know. Well, that's your responsibility to know where you're at. Now I did mention several of the programs won't even let you get in for more positions than you're allowed, but that's not to say they all do that. So I think it's more important that you just know where you are at than rely on the trading platform to basically halt you if you try to do too many. So let's talk now about scaling plans. Now that you should have an idea at least on how the max contracts work, some of the companies have what they call scaling plans. Not all of them do though. I will mention though, we are talking about the evaluation phase. Once you get funded, all of the companies have a scaling plan. So it's not necessarily a bad thing if your trader evaluation does have a scaling plan, because if anything, it's just getting you used to what you're going to have to deal with once you get funded. So I can speak from personal experience. Sure, it's nice to have your full contracts available, say those 10 contracts from the start, but when you get then to funded and you're only allowed to start with 2, it feels like a downgrade almost. So it's not necessarily a bad thing, like I said. But let's talk about scaling plan. So the information on this slide is current as of May 2021. I wrote here in all caps, verify your own evaluation. If you break a rule, they're not going to accept the excuse of, well, I saw this video by the Canadian futures trader guy, and he said that, you didn't have a scaling plan, and now you do. That, unfortunately, I don't carry that much weight in the funded trader evaluation realm, so I would encourage you to make sure you understand all of the rules of your companies, but this will at least give you an idea of where things stand currently. As well, this is in the evaluation phase. The funded phase, like I said, they all pretty much have a scaling plan, and it's up to you to verify what that is. So currently, and just speaking of the companies that I kind of have dealt with and been through and talked about, LeeLoo, OneUp Trader, and UProfit Trader have no scaling plan. You can go full clip. So if you ever hear clip, that just means your full allotment of contracts. So, if the max contracts is 10, that means you can trade 10 contracts from day one all the way until you pass. Earn to Trade does have a scaling plan. Now they call it the progression ladder, but it's the same thing. And we're going to look at a scaling plan here in a second, just to give you a sense if you're not even sure like exactly what I'm talking about. So TopStep Trader has a two-step evaluation phase. There's no scaling plan in step 1, but there is a scaling plan in step 2. And then all other companies outside of these 5, I have no idea. You're going to have to check for yourself. It will be fairly prominent in kind of the rules of the evaluation. So here is TopStep Trader's Step 2 scaling plan, because if you remember about 30 seconds ago, TopStep in Step 1 has no scaling plan. Once you advance to Step 2, there is a scaling plan. So I'm going to go through a lot more of this in the next slide or two, so we'll just quickly look at this. But just for your reference, this is kind of what it looks like on their site. So 100K account, and if you remember, 100K account was up to 10 lots. The thing is, you don't get 10 lots to start with. So let's just move to the next slide and we'll explain this a bit better. So here is the scaling plan for reference on the right. So 100K account, you have a $6,000 profit goal, and it says up to 10 contracts. Okay. Well, day one, you sign up, you pass step 1, you're on day 1 of step number 2. You start again with a fresh balance of 100K. Basically from 100K up until you get to 101,500, you can only trade 3 lots, and that is right here on this. So if you're below 101,500, 3 lots. So that means starting out day 1 of step 2, 3 lots is your max. Once you get above 101,500 up to 102, which is a pretty small step, quite honestly, it's kind of a weird one, I always thought, you can trade up to 4 lots, and it moves up from there. Once you get yourself over 103,001 cent, you can trade the full 10 lots. So basically you have to make your first 3,000 of the $6,000 goal before you're cut loose on the 10 lots. So you're going to have to ease into it. That's essentially what the scaling plan is. You're going to have to ease into being able to trade the full clip. Now another important feature is, when does this update? See the next slide. Let's take a look. So it depends on the company. It works differently in the different companies. Now I know there's a lot written on this slide. Let me just walk you through it. So know when this updates, because it's important. So with TopStep Trader, it updates at the end of the day for the next day. So for example, it's day 1 of step 2. You do 3 trades in and you're already at 103,500. You're more than halfway to your goal. Guess what though? You can't scale up to 10 lots immediately. You have to wait till the end of the day. The system will update. You'll see on your dashboard that you can now trade 10 lots. Like it or not, that's just their rules. Now it works both ways. Say you're on day number 2, you're at your 103,500, you're cut loose, you can trade 10 contracts, and in doing so, you manage to lose 3,500. You're basically back to 100K. Well, you can still trade 10 lots that entire day too, but once the day ends, that's when your balance will update, and that's when your maximum contracts will update, and it will always update based on where you fall in this chart. So Earn the Trade, on the other hand, it updates after every single trade. Now they don't have a dashboard that shows you this or anything. It's just written into kind of the rules. So if it was the same numbers, but this was Earn the Trade, on day 1, you technically could start trading the full clip after you reached 103,500. So again, know your program, know what the rules are. I will say with this though is keep in mind if you fall below the amount. So let's say day 1 you got to 103,500, you start trading 10 contracts and you fall down to 2,500 and you're trading 10 contracts, you just broke a rule. So be very, very careful. So that's pretty much it, guys, that I wanted to cover in this video. Hopefully you have a better idea if you were confused with what are maximum contracts, how do they work, what's the scaling plans. Here's a few tips and recommendations that I can give you, again, from my own experience. So keep in mind the maximum contracts is the most that you are allowed to trade. It's not necessarily the most that you should be trading or that you have to trade. I've seen that question several times too, just in message boards or comments, etc. You know, if it says 10 contracts, do I have to trade 10 contracts? No, you can trade one contract if you want. It's the maximum. I believe you could pass any evaluation trading far less than the max. If the maximum is 10, I bet if you are really on your game, you could pass it trading 2 contracts or 4 contracts, etc. You don't need to max out to pass these. Especially if you are new, I say ease into it. You know, it's all of our eyes, you know, open wide. You know, we see 10 contracts, we think of how quickly we could reach the goal. That's very true, but remember, if trades go against you, if you're in a trade for 10 contracts and a trade starts going against you, that can hurt you pretty quickly. Now, another recommendation, and this one is hard to live with, I think, sometimes. I have my own issues with this sometimes, but if things start going sour, meaning you start having a few losing trades, you would be better off sizing down, not sizing up. Let's say you were trading 4 contracts, size down to 2. I think the instinct most people have, and again I speak for myself, is to do the opposite and size up. You start revenge trading. You're going to get your money back as quick as you can. I can almost say without a doubt, as an example, let's say you were trading 4 lots and you have a couple of losers and now you've lost whatever, $1,000. If you size up now to 8 contracts, if you have another loser, it's going to hurt all the more, and now you've dug yourself an even bigger hole. You're far better off sizing down. Your goal isn't necessarily to dig yourself out of the hole that you made. The goal is just to get your footing, get back in the groove, get some winning trades under your belt, and go from there. So if this all sounds overwhelming, you're thinking, good grief, this is a lot of information. I don't even quite understand it yet. I know there's other things I need to figure out as well. I don't even know what product I want to trade. Don't worry. I would suggest one thing you could do is just trade for free on Sim for up to 2 weeks. So most of the companies will offer you a 2-week free trial account. Now your progress doesn't count towards a funded trader account whatsoever. You're basically just testing things out. But if you want to get your feet wet, you want to try out the software like Rithmic, you want to see what it's like to trade different products. All of the products work very differently in terms of how quickly they move, how they react to market conditions, etc. We talked about profit and loss per tick. If you want to give all that a try, there's a few links down below. 100% free to go sign up. I would also suggest just doing a lot of research. I mean, how I learned to trade futures was I spent a few months researching, just watching YouTube videos. Now, a lot of those videos went down roads to nowhere or roads to people trying to sell courses, which is where my channel came from, because I kind of got tired of that stuff and I just wanted to put out information that was useful to people. So try to find videos that can teach you a few things, whether it's trading methods, maybe some tips and tricks for different products, answering questions you might have. And then another recommendation, and this is just my own recommendation, you can do what you like, but I strongly suggest you don't pay for expensive courses from gurus. There is no shortcut to trading. Nobody's going to spoon feed you trades that are winning trades or trading systems that work all of the time. You really need to figure this stuff out yourself. Now, I'm not saying don't pay for any course. You know, if it's some, reasonably priced course that's going to teach you all of the basics, great. I don't have any recommendations. I personally learned everything for free off YouTube, so it is very doable if you're willing to invest the time yourself to figure things out. But when you see these, courses that cost like $3,000 and they promise you the world, please just don't. If you ever have a question, you're feeling tempted by one of these courses, feel free to email me, send me a link, and I will go through it and I'll probably tell you the reasons why I think you probably shouldn't take it. There is far better ways to spend that money, I think, in the trading realm, whether it's investing in equipment, software, trader valuations, opening your own accounts, whatever it might be. Paying for a very expensive course is at the bottom of the list. So I would say as well, in your research, one of your tasks should be figure out what product or products you like that really speak to you, and master that one. There's different opinions on this. Some people like to trade multiple products. That way, you know, if, say, crude oil isn't doing anything, well, maybe they trade ES that day. And if ES isn't doing anything, they trade the treasuries or whatever. I personally think you should look into just a product or a few products. I started out trading crude oil and only crude oil. I then jumped to the treasuries. I now trade both the treasuries and the NQ, but I'm quite honestly trying to get back to just trading the treasuries. I can only speak for myself, but I feel much more comfortable being a master of one thing, and these products do work quite differently. Sure, at the end of the day, we're just buying and selling, but how the ebb and flow of the different markets works, the tick sizes, that differs product to product. So how I trade, for example, NQ is a complete 180 different than how I trade the Ultra Bonds. So take that for what it's worth, do what you like, but these are just kind of the recommendations I would make to somebody brand new starting out. If you have any questions on scaling plans, how the contracts work, what the tick sizes are, any of the stuff I talked about or related to this, trader valuation companies, feel free to reach out to me. Email is best. I do have Instagram. I don't check it that often, so that's why I would say email me, and then it allows me to, I can just email you back a more thorough response than I could fire off on Instagram. So there's my email, Instagram, my website. All this stuff is down below in the description as well. Lastly, just to plug my website and my YouTube channel, and I'll just go to my website here. If you're interested in the trader evaluation programs, luckily a lot of the companies have reached out to me and given me various deals. Sometimes it's like a one-time deal. Recently just did a giveaway with one of the companies which went really well. There's 20% off like TopStep and Earn a Trade, 10% off LeeLoo, and then like I mentioned, a lot of the companies will give me like one-time special deals. So if you go to my website, the CanadianFuturesTrader.ca, go to the deals tab, and I keep this updated every single day with whatever is going on, and as well any of the spectacular deals, I'll post a video here on my YouTube channel. So feel free to subscribe. I do videos like this time to time. I do more videos going through the trader evaluations and as well trading my own accounts. You'll see more of those videos as well. So I want to thank everybody for watching. Hopefully this was useful to you and maybe clarified a few things related to the contract size and scaling plans and all of those things. I wish you well in your trading, and I'll see you in the next video.